Okay, so welcome to this new module where we are finally going to get stuck into the entry models, which I know for a lot of you is the exciting part for some reason. But really, before we get into that and we start really digging into the specific trade plan rules, you need to understand how we correctly build the narrative, which is really what we've been doing the whole way through the technical analysis module. And I'm going to keep going over it because the entry model, and you're going to hear me say this a lot, the entry model is simply a timing mechanism for your medium time frame idea and your medium time frame POI. That is it. Okay, so the most important part of this entire strategy by far is making sure you have built that overall narrative, right? So you are on the right side of the market, the correct direction, and you have got your POI selection. Okay, we don't just trade every single valid supply and demand zone on your medium time frame. No, we want to be trading the most highest probability ones, the ones that are in line with the narrative, the ones that make sense, the ones that have the risk to reward on our side. So these first 2 or 3 lessons of this module is going to be focused heavily on that. Okay, it's not going to be anything, well, no, you have seen some of it, but like we'll get into it and you'll see why before we actually look at the entry model itself. Okay, so if you're ever in the future struggling with the strategy and whatever, you need to come back to these lessons because this is really what is the whole key of having success with the strategy. Okay, so if you watch the previous lesson, I think will be the last lesson of the technical analysis module. This is where I kind of try to simplify things and summarize it for you, where we're talking about, right, the market structure is the first thing we do. It gives us our overall directional bias. Okay, we're looking bullish and we want to try and capture that next bullish leg to the upside. Supply and demand zones are what gives us a location for where we want to time that directional bias. Okay, and then we use liquidity as well to kind of time when the actual entry is ready from those areas of interest. Okay, so this was quite a simple diagram when it comes to structure because we were just looking at one time frame and we're just looking at one type of structure. So imagine it's your swing structure, but obviously we know in reality we use multi-time frames, we use 3 time frames, and we use 3 types of structure within that. So obviously it can get a little bit complicated, okay? But remember, we are always using the medium time frame to give us our immediate bias, the immediate direction, and the POIs that we're trading from. So I always need a medium time frame POI mitigation. I need one of these zones to be hit before I can look for my lower time frame entry, okay? So this lesson is going to be going over the high level trade plan again, okay, where we looked at the 3 types of, we looked at the medium time frame. We looked at the 3 time frames that we use. And then in the next lesson, we're going to look at what's called the medium time frame phases, okay? And that's going to help you a lot more when you're thinking about just the medium time frame on its own. So just to say that again, this lesson, we're going to go over again how we kind of think about multiple time frames together. But then the next lesson is when we're going to really dive deep into just the medium time frame. And we're going to look at the different phases of the market with the 3 types of structure. It will all make more sense when you go into it, but it's super, super key you get this. So we covered this at the start of the liquidity module. And really, this is when you just think of the 3 time frames. So you've got your higher time frame. So if you're taking more of a swing approach, that can be like your daily, your daily or 4 hour, or with the day trading approach, I'll still use the 4 hour as my higher time frame. Okay, and really all we're doing with this is we just want to know where is the current swing range for our higher time frames. So let's say the 4 hour chart, and are we currently in the pro trend run or the counter trend pullback phase? That's really kind of mainly what we're thinking about when it comes to your higher time frame. So i.e., when we break this structure, if we're trading this part of the leg, this is the pro trend run, and then this part is that counter trend pullback phase. Okay, if we're trading, this part of the 4 hour leg, and then if we're now in this part of the next 4 hour leg, this is the pro trend run phase again, where we're targeting the week high. Okay, that's really as complicated as you want to make your higher time frame. The medium time frame really is the main area of focus, like I keep saying. That is what I'm looking at 80-90% of the time. It's the main chart I'm focused on, when I'm live trading. It's what formulates my ideas, my directional bias, and the POIs in which I'm trading from. Okay, medium time frame is super, super important. So when I'm using my day trading strategy, that will be the M15 for me. Okay, so here the M15 is sort of this thin gray line. That is that chart here. Okay, so imagine, let me just redraw this for you. And let's make it 2 thickness. Okay, so this is going to be our medium time frame. So what we can do, like after we get a 4 hour breaker structure, your high time frame breaker structure, if you drop down to your medium time frame, so let's say the M15, this 4-hour leg is going to be forming bullish M15 structure, right? So we can trade that M15 structure. We can keep following. I mean, it's poorly drawn, but we can try and buy, price come into these POIs, and we can look for that next long. Okay, price pulling back into this M15 POI, and we can keep looking for longs following that bullish M15 structure. Where the higher time frame helps us is it helps us to signal when your medium time frame may change trend, right? Because yes, we're just following this and we can just blindly follow it until it changes. But if we understand that after the 4-hour break of structure, that higher time frame break of structure, we know that the higher time frame pullback is going to kick in, then we are on our toes and we're ready for our medium time frame to change trend at any moment. Why? It changes trend to facilitate the higher time frame pullback. Okay, so yes, we can follow this, but we have to know that, quick targets, because at any point the M15 or the medium time frame can shift trend. So as we come into our high time frame supply zone, right to the left, that's a very good piece of confluence that we can now use as we come into here to anticipate what? To anticipate that high time frame pullback may now be starting, and therefore, yes, at this point, the medium time frame might still be bullish. And if you're not looking at the higher time frame and using multi-time frame analysis, you might just be buying in here, anticipating that the medium time frame is going to take out that high. But then what happens? We know, because we've come into high time frame supply, that this is when the medium time frame is about to shift bearish, right, to facilitate that pullback. So then when we get that, this then becomes our strong medium time frame high, right? It broke the low. This is now the range we're playing within, and this gives us our immediate bias for the day. So when I come to my desk and I can see, okay, medium time frame has had a bearish boss or IBOS. It will depend on the exact scenario. It's different every time in the market. But I will know that this is a strong high. I'm looking for price to come back into my medium time frame supply zone, and I'm going to target this week low. Okay, so I'm just following the immediate medium time frame bias, which is going to be bearish. Okay, and I'm going to be looking for sells from my medium time frame POIs. And what is the objective on the high time frame? Right now, the objective is to play that high time frame pullback. Okay, so you want to find your medium time frame immediate directional bias, and it's going to be bearish because this is the bearish range. This is going to be the highest probable sell for the day, right? Coming into that supply zone at the premium of the range. Once price mitigates our medium time frame POI, only then do we drop down to our lower time frame and we look for our entry models, which you're about to learn in the following lessons. Okay, so you see how you start to build a narrative. Where is my medium time frame structure? It's bearish. Okay, I want to look for sells from supply. That's going to be the highest probable area. So I find my POIs to look for sells. Now, the next layer of your analysis to take your trading to that next level is to understand what is the objective of the medium time frame right now, and the objective is to play the high time frame pullback. That's what we're playing, okay? And that's literally how you will formulate your trade ideas every session. Know the immediate directional bias for your medium time frame, understand what its objective is for the higher time frame, right? It's fulfilling the higher time frame objective, and at this point, it's to play the pullback. And then again, the next session, maybe we get another break of structure on your medium time frame. This is the new range we're playing within. So again, we've still got that bearish range. We look for our supply zones to potentially play that directional bias short. We wait for a mitigation, and then if we think it's a higher probable POI, and if we think we have enough risk reward to target that low, then we'll look for our lower time frame entry model. It's the same thing every day, and we understand the objective on the higher time frame. What we're doing, we're playing the pullback. All right. Now, then when we come into the higher time frame demand, okay, we need to start thinking what? We start thinking that maybe that pullback objective is complete. Maybe this high time frame strong low is going to hold, and now we're going to look for that next high time frame leg to the upside. So if we understand that on the high time frame, whatever one you're using, that means now potentially we can look to get involved early, and we can look to get long against the bearish medium time frame range, right? Because that would be the last break of structure here. So from a medium time frame perspective, we're in a bearish range. But what do we understand? We understand now that the high time frame may be now ready to do that next leg. So therefore, the medium time frame may be about to change trend. So if we get like a medium time frame chalk, you might want to take longs within here. Okay, even though it's against that immediate directional bias on the medium time frame, you may be anticipating we're going to go here to the upside. Okay, or you might just want to wait. You might just want to wait for that bullish medium time frame boss or IBOS, depending on what it is. Now what do we have? Now we have a new bullish range. Okay, because that was the last boss. So now our directional bias is bullish on the medium time frame. We are aligned with the higher time frame, which is really high probability. So we identify our demand zones. We've probably got one here. Okay, wait for price to pull back. Our alert goes off. Is this a high probable POI? Yes, it's a flip that led to the break of structure. It's probably in the discount. Okay, when price comes into here, I want to look for my lower time frame entry model and get involved. And for some of you who want to have those bigger technical targets, well, now we're aligned with the M15 on the 4-hour chart, right? They're both bullish. We understand the objective is to target that high. Our expectation is that the medium time frame structure will stay bullish until it targets that high, and so on and so forth. Okay, so you guys should be somewhat comfortable. We've covered all of this before in the market structure lessons and at the start of the liquidity module as well. And this is just thinking about, really those two time frames, your high time frame and your medium time frame, right? But one type of structure, really. We're just kind of looking at one type of structure here, wait for our mitigations, and then we look for our lower time frame entry model. Okay. Now, as you will know, of course, we have three types of structure, right? Imagine that like this here is your medium time frame swing break of structure. So this is your medium time frame swing high, and this is your medium time frame swing low. Okay, that's your medium time frame swing range. Okay, cool. Within that, what could we have? We could have medium time frame internal structure, right? And then within that, what could we have? We could have medium time frame fractal structure. So that brings a whole nother dimension to your trading that you have to anticipate. So it can get quite complex, right? Of deciding, do I want to follow the bullish medium time frame internal structure within here and like take these longs, okay? Because this long is counter the swing trend on your medium time frame, but you want to play that swing pullback up into here. And then do you want to wait for a medium time frame chalk and then get involved in here? And then, it can get quite complicated. So what we're going to do in the next lesson is go through what's called the medium time frame phases lesson, okay? And that really, that next lesson we're about to get into is going to be super, super important for understanding, just really bringing your trading to that next level. I'm not going to speak about it too much more because we'll dive into that lesson. But first, the point of this lesson was to think about multiple time frames. So how you think about like your higher time frame and your medium time frame together, right? The medium time frame fulfills the objective of the higher time frame. Hopefully you're kind of starting to get that. We'll go through a trade example in a minute or a chart example. And then the next lesson is where we're going to forget about the multiple time frames, but we're going to focus really deep on how to interpret the three types of structure on your medium time frame. Okay, but we'll get that into the next lesson. But for now, let's kind of look at a chart example of just thinking about your higher time frame combined with your medium time frame. Okay, so but for now, let's kind of look at a chart example of just thinking about your higher time frame combined with your medium time frame. Okay, so here we have two charts. We have our 4-hour chart on the left, and we have our M15 chart on the right. Okay, so the higher time frame in this case is going to be the 4-hour chart, and then the medium time frame is going to be your M15. So as we can see here, the 4-hour chart, clear bullish structure here to the upside. Okay, simple, right? We get a pullback into our strong low, where into our demand zone is, and then we look for that next movement to the upside. Okay, so when we jump down to our medium time frame, when it's happening in the market and price is in this leg here, okay, you can see here, what do we have? We have bullish structure here in the M15. So we know that if we're following these bullish ranges, and then we look at our higher time frame, what is the objective we're fulfilling here? We're fulfilling that higher time frame leg. Okay, so let me go over that a bit more slowly. Over here, we have the 4-hour break of structure, and we have the bullish 4-hour leg. Okay, happy days. If we look here in the M15, this was that last M15 swing pullback, and then we get a swing break of structure, and then we kind of follow these, we form these shallow pullbacks, so it's just internal structure here to the upside. So we can look to follow these, but we have to understand that at any moment, what can happen? That deeper 4-hour pullback can kick in, because right now, yes, we're following the bullish M15 ranges, but at any moment, we know that higher time frame pullback can kick in. So it's a bit riskier. So we have to be very quick with our targets and or just wait for the pullback. So as we can see, demand's respected, but as we get quite overextended, eventually, what do we have to anticipate? That structure is going to shift bearish. Okay, I viewed all of these as internal ranges on the M15 because the pullbacks are quite small. Okay, so my M15 swing leg actually stays below here as well with the 4-hour low. Sometimes that will happen, but we get the medium time frame IBOS to the downside. Okay, so now this becomes our medium time frame strong high. This is our medium time frame weak low. So now what we're looking to do is follow the bearish medium time frame internal structure until where? Until we come down into 4-hour demand. Because what are we doing? We're playing the swing pullback. Okay, so in this occasion, it ends up being the M15 and the 4-hour swing range. Just sometimes that will happen, right? Sometimes your medium time frame swing range will be the same as your 4-hour swing range. Okay, this is my 4-hour swing range here and here. And it just so happens that after the M15 boss, if I zoom out, okay, here, it just so happens that all of these were kind of very, very small pullbacks. So that means that none of them are swing pullbacks, therefore my M15 swing low stays in the same place. So sometimes that will happen where your M15 swing range and your 4-hour swing range will be in the same place. And that's okay. And then what are we expecting? We're expecting the M15 and the 4-hour swing pullback. We eventually get the M15's internal structure shifting bearish. So now at this point, it's high probability to follow the bearish M15 internal ranges until what? Until it fulfills its objective, which is to pull back to that extreme demand level. All right, let me just zoom out again so you guys can see that. So 4 hours bullish, get the breaker structure, pull back into demand, and then that next level. I think we all get that. It's quite simple. M15, same thing, right? If you look at the 4-hour chart at the same time, you can see we're following these tight ranges, but we have to understand that at any moment that 4-hour pullback is going to kick in. We get confirmation of that with this nice bearish IBOS, and now we can look to follow the bearish internal ranges. This is really high probability trading. When I get this sort of trading, this is where I'm looking to get involved with really high conviction. Okay, loads of risk reward down to demand. There's nothing significant to the left I'm too concerned about, right? Nothing on the higher time frames. Strong momentum to the downside. Clear tight internal ranges to work within. We want to be selling in here, selling in here, selling in here. Really high probability. Okay, so if we go back to our theory diagram, what stage is this? This is basically here, right? We had the 4-hour breaker structure. We were following the small internal ranges to the upside. Then we're expecting the pullback. We get confirmation of that with the medium time frame IBOS on this occasion. And now we can look to follow those bearish M15 ranges until when? Until we come into 4-hour demand. Now we can anticipate that if the 4 hours chart is going to stay bullish for that next leg, what can we anticipate our medium time frame is going to do? We can anticipate that it's going to shift bullish here. Therefore, we don't want to be selling from here. It's lower probability to do this now. Why? Because the objective is complete. Therefore, we're anticipating that it's going to shift bullish. Okay, now it shifted bullish. Now what do we expect? Well, this becomes a strong low because it's broken structure. And now we expect the medium time frame structure to stay bullish until when? Until it fulfills its next objective, which is what? To take out the 4-hour week high. Do you see how it starts to come together? All right. M15 shifts bearish to facilitate the 4-hour pullback. Objective is now complete. The new objective is to target the week 4-hour high. So therefore, if we're following our medium time frame ranges for our trade ideas, we want to be looking for longs within these ranges, right, to keep following that 4-hour objective. And then once we get that 4-hour objective here, if I play price forward, at some point, it's not going to happen straight away, but at some point we can anticipate that the 4-hour chart is going to pull back. We have this old 4-hour demand zone to the left, okay? This demand zone, supply zone over here. So that's a good area to anticipate that potentially the 4-hour pullback may kick in from, right? So what can we do? On our medium time frame, we can cautiously follow, if it makes sense, follow the medium time frame ranges until we get up here. And then what do we expect? We expect the M15 to shift bearish to do what? To facilitate the pullback into here, right? So let's see, play the 4-hour forward, we come up into 4-hour supply, okay? And then it starts to pull back. What does that look like on M15? You can see it here, this all played out, right? We get one more bullish range up into 4-hour supply. So yes, we could technically look for longs from within here, but if you're using multi-time frame analysis, you now understand that we can shift bearish, right? And that's what happens. And then we can play the pullback or potentially the full on blown reversal. We look at the daily chart, we understand that brings it to a whole new level, right? We can add in the daily as well. But keep it to 3 time frames initially, otherwise it gets confusing. So that's essentially how we will be building our narrative in the market, okay? We'll be, saying, okay, we come into today, whatever day this was, Tuesday the 28th of November. I would get to my desk and go, right, we've almost taken out the 4-hour high. We haven't quite yet. So it's not ideal to be buying this high in the 4-hour range, right? Because, we're in the premium, but the objective is already complete. We've already pulled back and we're now expecting that high to be taken out on the 4-hour chart. What do we have in the M15? We have clear bullish ranges. So if price is here and I come into my session, what do? Well, I look at the demand zones. There'd be one here, right? There'd be one here, which is the one that is drawn. Okay, so how do I formulate my trade idea? Well, I've got 2 demand zones to pick from. This is where I want to be looking to get longs from. Whoops, leave this one here, okay? 2 mitigated zones. And we just look for price to pull back in, and I look for my long from either here or either here. And as you're about to learn with the entry models, I spoke about it in the previous liquidity module, there's no liquidity to the left, so where do we need it built? We need it built to the right. There was none built to the right, so where's the available liquidity? It's behind the low itself. Okay, we end up liquidating the lid into our extreme demand zone, high probability, let's get our long entry, and there was a beautiful trade here. And then, you follow your management strategy wherever it is to take out at least a 4-hour high, okay? This is when we get nice cleared price action. This is exactly what we want to be waiting for. These are high probable conditions. Wait for our liquidity requirements, again, which you're about to learn, and we go. So hopefully your brain can kind of start to see this all coming together. Of course, sometimes structure can be a lot more complicated, but when it is complicated, we don't need to trade. If the directional bias is not clear, that's a good indication to stay out. We want to be waiting for where it's crystal clear, the intentions are clear, we know what the objective is, the POI is well priced, we get our entry, that's when we get involved. There are going to be times, okay, where it's not so clear, where price is just moving sideways in a range like here. And this is where we have to be very careful to not get ourselves in deep drawdown, not let it affect our confidence, okay, because not every day is going to be a clean day. And that is something that's going to take you time to learn, that just because there's a medium time frame POI and just because you've got a bullish bias, it doesn't necessarily mean you should be exposing yourself to risk and taking trades, okay? But that will come with time and experience. So that's kind of an initial, walk into what I wanted to cover first before we dive into entry models, just to really get you thinking about how to build a narrative and to build your expectations of price, because this is hard to get your head around, but I'm telling you now, this is what will be the key of whether or not you are successful with this strategy. Okay, you've heard me say it throughout the whole course. A lot of you can probably logically understand that, but I see the same thing again and again and again in the community as members come through. You know, it takes them 3 to 6 months, sometimes even longer, and they'll make a post in the Discord and go, okay, now I finally get it. I need to really work on building the narrative and POI selection. I can't just hit every POI, okay? And you need to come back to these lessons then and rewatch them because your awareness will expand and you'll pick up so many things once you've had more experience in live market when you come back to these lessons, and the penny will really start to drop. Okay, so we've looked at it at a bit of a high level with looking at those two timeframes together, the 4 hour and the M15, right? Your high time frame and your medium time frame. In the next few lessons now, we're going to dive really deep into just looking at the medium time frame on its own and combining the 3 types of structure and looking at phases, okay, when market structure can get a bit more complicated. And that's when you're really going to bring your trading to that next level. Once you start to kind of get your head around that, then we'll look at the actual lower time frame entry models. Because like I said, that's the very, very, very last thing. The entry model is the easy thing. That's a super easy thing. The hard bit and the bit that will make the difference between being successful or not is knowing whether or not you should be trading from this supply demand zone. Building the narrative, doing your POI selection, and how you do that is understanding multi-time frame analysis and understanding the 3 types of structure on your medium time frame, which is where we have medium time frame phases, okay? It will take you time, but when you finally get that and it makes sense, I'm telling you, your trading will be infinitely easier. Alrighty, now strap yourself in because we're about to get seriously, seriously saucy here. Because, you know, up until this point, you can kind of probably get it, what we're trying to do. We have our medium time frame. We try and trade in line with our medium time frame, right? That's our immediate guide. There are POIs. When price comes into our medium time frame POI, right, i.e. around here, we drop down, we look for our lower time frame entry order, right? You kind of probably get that general philosophy of what we're trying to do. But as you've probably seen, when you get into the live market, when you try and add in, you know, your higher time frame narrative, it can get a bit tricky. It's like, okay, price is down here. I've got a medium time frame POI, but do I wait for a chock? Do I wait for an IBOS? How much confirmations do I want? Is price going to come lower? Is there too much momentum? It can get a bit overwhelming. It's like, how far do I target? You know, how do I understand how to bring in those higher time frame POIs and the higher time frame narrative? Like when you just have a medium time frame and you just have your lower time frame, it's a bit easier to count in your mind, but then you obviously need to understand the bigger picture to really boost your strike rate and boost your risk reward and all of that good stuff. So a lot of times we get the questions of how do you take that step from, you know, going from just sort of those 2 timeframes, just looking at medium time frame POI and your low time frame execution, and then taking it to that next level. And I think this is going to be the key to it. Okay, there's a lot going on, so don't try and read it all at once. I'm going to hold your hand and we're going to go through it nice and slow, step by step. But what I think is the key is just understanding what I call the medium time frame phases. Okay, so there's 4 phases or 5, but really kind of the 4 main ones you're going to be in is just either going to be, and again, just think about your medium time frame here for now. Okay, so whether that's the 4 hour, the 1 hour, or the M15 for you, just kind of think about your medium time frame. This is what we're talking about when we talk about these phases. Okay, so you're either going to be in line with both the swing and the internal. Okay, so in this previous diagram, well, let me just quickly say, so it's either obviously going to be pro swing and pro internal, pro swing but then counter internal, or counter swing but pro internal, or counter both of them, or there's no real direction and we're in a range. Okay, so in the previous diagram and the one you've been used to sort of throughout the majority of the course, we've had this well, really it's a two time frame diagram, right? Because we've had the higher time frame move, right? So, you've got your hard time frame leg, that's your hard time frame swing range. You play the hard time frame pullback, and your medium time frame changes trend or changes order flow, depending on how big the range is, right? Because sometimes that will be an IBOS here. If your medium time frame low is down here, sometimes that will be a boss. If that was a medium time frame swing pullback, right? You guys should be comfortable with that. It can kind of be both scenarios. But the general idea is your medium time frame will shift bearish, right, to facilitate that hard time frame pullback, then it shifts bullish to facilitate the next movement. Okay, you guys should hopefully be very comfortable with that. If you're not, you need to go back to market structure and get comfortable with that. Okay, so this diagram is sort of those two time frames, and then this is where we brought in the third time frame for your actual execution when we get in there, right? So that's kind of the multi-time frame way of thinking about your trade plan. This diagram here, now just think about one time frame. It's just your medium time frame. Okay, I know we have hard time frame POIs drawn on, but in terms of the actual structure and the structural breaks, it's just one time frame. So hopefully that should really help. Okay, so put your medium time frame in your head, whatever that time frame is for you, and let's talk through it. Okay, so your medium time frame is bullish. We have a swing break of structure. We have an internal pullback, right? We have a next leg up, and then we get that bearish IBOS. When we get the bearish IBOS, what are we now playing? We're now playing the swing pullback. So what can we do? We can follow those medium time frame internal ranges to play the medium time frame swing pullback. Okay, so this becomes your medium time frame strong internal high. This is your medium time frame weak internal low, right? So your swing trend is bullish on your medium time frame. Your internal trend has now shifted bearish. Okay, so now we can follow that internal trend to facilitate the M15, or I should say medium time frame swing pullback. Okay, then when the medium time frame internal trend switches bullish, where you get the bullish IBOS, what does that do? That signals the end of the medium time frame swing pullback, and then we get the movement to the upside, right? We learned this literally module 1 of the technical analysis. Your three types of structure, you have your swing, you have your internal, and you have your fractal, right? So when you get the chocks, what does that do? That just signals the start of the internal pullback and the end of the internal pullback, right? Bearish chock, end of the internal pullback, next internal leg, okay? So just thinking about that, one time frame, three types of structure, you should be very familiar with the expectations. And if you have that nailed down, then it makes all of this a lot more simple. So if you're just thinking about one time frame, your medium time frame, and you're trying to figure out what's my medius bias, what are the POIs, and what's the idea, then that can help you to understand, whether you want to take the trade or not and what confirmations you want to wait for. And like I said, there can only be really sort of these four main phases, or, we're just kind of in a range, right? And we'll get onto that. So the questions we always get, I keep saying this, is like, well, when do I wait for a medium time frame chock? When do I wait for the IBOS? When am I happy to trade against that? When can I be aggressive? When should I make for more? And it's a good question. So this is what I've tried to distill it here as best as I can to really help you. And all it comes down to is, one, identify what current phase you're within. That should be pretty simple, right? We learn this in market structure. And then you want to then refer to this, okay? And this can help you to understand what's the objective, when is it best used, and what sort of questions should I ask myself, and what confirmations do I want to consider trading for. So again, this is not giving you exact rules, but this is telling you, it's giving you very kind of good advice and firm guidelines of what you may want to do in your trading. And what I'll preface this all with is, when you're starting out, you kind of really only want to focus probably on just pro swing and pro internal, or at least pro internal, but we'll get into that, okay? So let's talk about the first phase, phase A. So this is when you're pro swing and pro internal, okay? So i.e. the swing is bullish, so we want to wait for the internal to be bullish as well. That's when we get the bullish IBOS. So from this point onwards, that's when you're in phase A, right? Looking for the longs, trading in line with that bullish internal trend, and it's in line with the swing trend, okay? And likewise, that can be over here as well, because at this point, you're pro swing, and I haven't drawn it on, but there would be like pro internal moves within here, right? Like that, okay? So when price is in phase A on your medium time frame, what is the objective? Well, when you're here, the objective is pretty much to target the weak swing high, right? Internal structure was bearish to facilitate the swing pullback. Now it's shifted bullish. So why is it shifted bullish? Well, because the swing pullback is over, the objective is complete. So now what is the new objective for the internal structures? What is the internal structure's job? Its job is to facilitate that pro swing trend run to target that weak high and a little bit beyond, right? That is the objective. So always ask yourself, what is its mission right now? What is it trying to do? It's shifted bullish to play that pro trend swing run to target the weak swing high, okay? So just remember, thinking about one time frame. So that's what you're doing. You're targeting, if you're in this part of the phase, you're targeting the weak medium time frame swing higher low. Now, if you're in this part of the phase, then obviously we've already broken the high. So all we're doing now is we're just facilitating the rest of that pro trend run. Okay. So again, it'd be the same cycle here. You're in phase A, you're targeting the week high because the pullback's over and now you're doing this. But sometimes, as we know, when we get the boss, we don't always just pull back straight away. We can keep getting that bullish order flow, that bullish internal structure. And then that's when you turn into this part here, okay? And that's when you're just continuing to play the pro medium time frame swing trend run, okay? So you're just playing these parts up here. That's all phase A. So generally when that happens, when you get the bullish IBOS, the swing pullback's over, you now have that full medium time frame alignment. So that just means that the swing and the internal structure are both bullish, they're both aligned. The swing pullback is now finished, and now we can follow that internal structure. Why? Well, when we get that bullish IBOS, this becomes our strong internal low. So we expect it should hold, price can pull back, but it shouldn't break it. So we can keep buying from these strong lows, and we expect that bullish internal range to hold, right? Now the bullish IBOS, this becomes our new strong internal low. We expect to be able to buy this, right? We expect it to hold to continue higher. So when you get that pullback to a level in which we expect the swing higher low to form, and we get the bullish IBOS, that's when we just follow the medium time frame internal structure, okay? So why are we going through this? Well, the reason we want to talk about these phases is to know how you're supposed to behave when price is then coming into your medium time frame POI. Like, because the question you always get is like, well, price is coming back. Do I wait for my medium time frame chalk? Do I just jump down to my lower time frame execution model, right? And this is what we're saying. Generally in this phase, you probably don't need to wait for a medium time frame chart, when price mitigates your POI, right? When price is coming down here, because everything's aligned, it's 9 times out of 10 going to be pretty high probability as soon as price comes in to look for your low time frame execution model. Now, of course, you still need to be doing POI selection, right? Did it flip? Did it sweep liquidity? Did it cause the IBOS? Is it well priced? Et cetera, et cetera, et cetera. But the general idea is when price comes in, I'm happy to drop down to my lower time frame entry model at this point because of the phase we're in, right? With the expectation. So you can, general guideline would be just go straight to your low time frame entry model. Okay. Likewise, when you're here, so this would be if this internal trend just kept continuing, right? The price is coming in. We understand that this isn't super high probability because after the swing boss, at any moment, the internal structure could shift bearish, right? So is this as high probability here as here? No, technically they're both phase A, but this is a very different trade to this one, right? Because we could expect that swing pullback at any moment. But generally, if price is coming in here, I'm not going to wait for a medium time frame chart if I'm going to trade this because there's not going to be enough room, right? This is bullish order flow. You just want to get in and you want to be following it, quick, aggressive trades. Okay, so phase A, that's the most ideal really scenario in theory to be trading from, right? And it's a bit more simple. You basically have full alignment and you just want to be, as soon as price comes into your POI, you can drop down to your low time frame entry model. Okay, that one should be somewhat straightforward. The next phase is when you are trading in line with the swing. So in this case, we'd be looking for longs, right? It's in line with the swing structure, but at that moment, it's counter the internal trend on your medium time frame. Okay, so this would be one such example. Okay, so your internal structure has shifted bearish to facilitate the swing pullback, and now we've come into this level. So if we're looking for longs, right, at this moment, we are pro swing trend, but we're counter the internal trend, right? Because that's the bearish internal trend. That's your bearish or your strong internal high. Okay, so if you're getting long, you are trading against the medium time frame internal trend, right? You're trading against that, but you are pro swing trend. So this is phase B. So when you're in phase B, again, ask yourself, first thing, when you've identified the phase, that should be pretty easy. Now, what's the objective? Well, if you're getting long here, right, and you want to trade pro swing and counter internal, you are anticipating the end of the swing pullback, right? So you're anticipating that this is over, right? Because why did the internal structure shifted bearish? It shifted bearish to facilitate that swing pullback. So if you're now getting long against the internal, but pro swing, it's because you're probably anticipating that, that's going to be the end of the swing pullback and we're getting that pro swing trend run. And you're anticipating that the internal structure is going to shift bullish. So that's why I said you're anticipating the internal reversal. Okay, that's generally the best time to be doing this. When you think the swing pullback is over, you're trading counter internal, but you're anticipating it's going to switch trend anyway. You're just getting in a bit earlier, right? Rather than waiting for when it has, you're getting in here, okay? So when is this best used? Well, like I said, it's best used when you think the swing pullback is likely finishing. So where are the areas in which that's most likely to happen? Well, it's most likely to happen when price is actually pulled back past the swing EQ, okay? So that's the swing EQ of the leg, right? You want to be doing it when price is likely back in the swing discount prices, because we know that's when there's an increased probability that the swing pullback may be over, the high low may be forming, and we go. So that's why it's best used to be trading against the internal trend when we've actually pulled down into the swing discount, because we're more likely to form that higher low, right? And then also, basically, what medium time frame or higher time frame POI to the left, right? Have we mitigated? Is it well priced? That's what I mean. Is it at least in the discount if we're getting long, or ideally the extreme? Because if we mitigate the extreme like we have here, then we know, well, this is the level that has to hold if we're going to switch bullish, right? This is the time to do it because you're anticipating that movement. Okay, so this purple phase, this is the best area pretty much to do this on this whole sort of cycle, right? Because this is the level in which you're anticipating that reversal is going to happen. Because technically, if you just go, right, what phase am I in? And I'm pro swing and counter eternal, there's multiple levels of that. This would be pro swing, right? You're getting long, but it's counter the internal trend. So with this would be pro swing getting long at this low, trying to buy, but you're countering the internal. So with this, if you're trying to buy down here. So are these as good? Well, no. And that's why you want to look at the best use, right? You want to be doing when we're at an area in which we actually expect the internal trend to shift bullish, right? And that's why you can go through that list and it can help you to decide. And basically what it comes down to is how we come down to the last level. Okay. Now that's not to say you can only trade phase B down here. It's just this is the best time, right? Because there may be times where, let's say, there's a decent, potentially sweep flip medium time frame POI over here, just move it up a bit, right? And price comes into this level, and you might want to take that long, right? If you're more advanced, and that technically is phase B, right? It's you're getting long, you're in line with the swing, but you're counter internal. But you have to ask yourself, what are you trading at this moment? Your expectation should be it's just an internal pullback to internal supply, because we're likely going to come lower. So you have to understand that that's the trade you're playing, whereas that's a very different trade to here, even though they're the same phase. You're starting to see now how you really need to use all of the confidence to understand where you're at, what your expectation would be. So one, if you're going to take that trade, realize it's lower probability compared to here. Two, realize this is all you're playing. The objective is just that. Yes, it could go higher, but you shouldn't be thinking that. You should just be thinking, I'm going to target here. It's just a quick move. Three, what confirmations are you going to look for when price comes into your medium time frame POI at this moment? Because when price is coming here, yeah, you're pro swing, but you're counter internal, and you're probably going to want to wait for at least a medium time frame chalk, right? You don't just want to jump in and the medium time frame fractal and internal is bearish. As soon as price comes into this level, you're jumping in on your lower time frame, because that's going to be a lot lower probability. Whereas if you at least wait for a medium time frame chalk, what does that do? At least it gives you some confirmation that now the internal pullback is going to start, right? So this is an area in which, if you're going to be that aggressive and take this, what I would say is a reasonably low probability trade, you're probably going to wait for a medium time frame chalk there, right? Whereas here, this is the same phase, right? It's still against the internal, but where are we? It makes a lot more sense now that we're probably going to do that. So this might be where you might not want to wait for a medium time frame chalk, right? Even though you're still in the same phase. Doesn't mean you have to. You can still wait for it in some instances, but hopefully you see, I'm not saying in every single scenario you should do exactly this, because price action is going to be a little bit different. Was there a decent corrective move, big liquidation into this level? What's the higher time frame saying? But this can really just help you to ask the right questions and know, right? So like I said, this phase is best used down here when you really have a lot of reason to believe that the internal structure is going to shift bullish and you've got risk reward on your side. But you can still trade these moves. You want to be a bit more aggressive and just play internal pullbacks, okay? That's going to be up to you. So the other question you want to ask yourself when you're trading counter internal is there enough risk to reward to the nearest by internal supply and demand or the strong structure? And what that means is if you're getting long here, okay, you want to be getting in where right at the start of that internal movement, because you don't want to be getting in after price has pulled into the strong internal high and mitigated supply, because you're much more likely to continue. Although in this instance you may want to, because there's good reason to believe we're going to go bullish. But if you were trading this movement here, right, if price has moved up and then you're looking for an entry here, it's do you really want to be getting long now? Because we pretty much already pulled back, mitigated supply. That's not the area to do it. You don't want to be buying those weak lows, okay? So just ask yourself, if you want to get in counter internal, you want to be getting in at the start of the move down here. But if price has already pulled back up here and you're not tagged in, you probably just want to wait for the IBOS in that instance, right? Don't be trying to chase it up here, because you're trading right against this. That's all that means. So in terms of whether you should wait for a medium time frame chalk or not, this is what I was talking about here. You want to consider if there is unmitigated POIs behind, okay? So down here, right, probably might not want to wait for that chalk, because this is the last level that has to hold. So you might want to jump into your low time frame entry model straight away, right? That's up to you. Whereas here, like I said, if you're getting long, you're probably going to want to wait for a medium time frame chock to at least signal that, you know, this is pulling back. Otherwise, we could just keep melting, okay? Because there's unmitigated stuff behind it. There's cause for lower prices. The other really key thing as well is this is where you can start to bring in your higher time frame, and that can help you to suggest how is your medium time frame going to behave. Does your higher time frame suggest that the medium time frame swing trend could reverse? So although we're bullish, is there reason to believe that actually we might shift bearish, right? Is there reason to believe that we could just keep coming down like this and the medium time frame might be ready to change trend? Well, what's going to really help you with that is the higher time frame, right? So for instance, have we mitigated a higher time frame level that suggests we're now going to shift bearish? Okay, so let me visualize this for you. Let's imagine this is your higher time frame, okay, whatever that is for you. Now, let me just draw this for a second. Make it a bit gray. Okay, now let's just take our time with this. So your high time frame is bearish, right? Here's your high time frame POI. Now on your medium time frame, right, you're bullish and you've just come into this level here, okay? So where I'm circling on this diagram is here. Imagine that, okay? So what are we doing? Higher time frame is bearish. We've come into the higher time frame strong high, into that higher time frame supply, but our medium time frame is bullish, okay? And that's this moment here. So if price is then coming down into here, right, we're coming down, that's this moment here, right? So this looks like our strong medium time frame low. We're coming into this level and we want to get long. Well, what have we done? We've mitigated higher time frame supply, i.e. up here. The higher time frame pullback is now likely complete if that higher time frame is going to continue its bearish trend. So on paper, this is a strong swing low. It's pro medium time frame trend. Do we really want to be buying from here when there's really good reason to believe that we could be about to switch bearish to facilitate the next higher time frame leg to the downside? Okay, so in that instance, it's a very, very different trade. And you might want to go, well, actually, I don't want to jump in. I'm going to wait for the IBOS, right, to confirm that this swing pullback is over, that this low is holding. I want to wait for a lot more confirmation. Okay, why? Because of the higher time frame. So hopefully that can really help you with that. Again, bringing in the higher time frame story. And I wrote that in here, okay? So when we're at this point here, if the higher time frame is bearish, like it is here, right? We have the break, that's our strong high. Consider if the higher time frame swing pullback may be complete, i.e. where are we? Are we here? Why is your medium time frame bullish? Well, the higher time frame will tell you we're in the higher time frame pullback phase. So if the medium time frame has now completed its objective, i.e. to pull the higher time frame back to supply, well, the objective might now be complete. So now your medium time frame might be about to switch bearish, okay? So that can really help you to know how to behave depending on where you're at, right? So then the medium time frame swing might be about to switch bearish and you need to bear that in mind. So when you're down here, this is why you want to ask yourself these questions. Yes, this is the last area that needs to hold if your medium time frame is going to continue bullish, right? So you might want to be aggressive looking for longs within here, but it depends on the higher time frame as well. Are we in line with the pro higher time frame trend? If we are, then yeah, you probably do just want to get involved because we're probably going to continue, right? Your medium time frame and higher time frame are aligned. Happy days, let's go. But also you might want to consider, is it well priced on a higher time frame, right? Because your higher time frame low might be like all the way down here, right? So that, it could actually switch bearish to come back down before we go. Okay, so you need to bear that in mind as well. Or is it the example we just talked about where the swing pullback is likely complete, we're up here, and potentially we're about to switch bearish. Okay, that's something you might want to consider. Okay, so this is quite comprehensive, but hopefully it really helps you to make those decisions on when, why do I wait in certain situations, even though they're all phase B, will I jump in here? Why would I then wait for this one? Would I at least wait for a chock? And then in what situation would I ignore this? And I would wait for that. And a lot of it is to do with what's your higher time frame saying, how good is this POI, et cetera, et cetera, et cetera. Am I getting in along here or am I getting along here? You need to understand the whole story of what makes sense. What do you expect? Is risk reward there? So in more simple terms, hopefully this cheat sheet really helps. If the higher time frame suggests that this medium time frame low is going to go, then just wait for the IBOS, right? Just wait for that to happen. Then you're back in phase A. Okay. So yeah, I know there's a lot to take in here. Just keep watching this again and again and again and again. And hopefully this cheat sheet will just really help you to kind of start to wrap your head around it. Okay. So that's phase A and that's phase B. So phase C, counter swing and pro internal. Okay. So this is when trading counter swing trends can be still pretty damn high probability because you're trading in line with the internal structure. And that can be decent, right? But again, there's certain times in which it is higher probability and there's certain times in which it's lower probability. So what are those moments? Well, the kind of typical high probable time is when we've had the swing boss, right? We've come into our higher time frame level. We then get our medium time frame bearish IBOS. So our internal structure has shifted bearish. Really good confirmation that that swing pullback is now starting. Okay, this becomes our strong internal high. That's the internal range we're playing within. Okay, and then we come into this level. So that is phase C. You are trading short, so you're against the bullish swing trend, but you are pro the internal trend. Okay, so at this moment here, all right, what is the objective? Right, always ask yourself, okay, you've identified the phase, now what is the objective of this phase? The objective is to play the swing pullback. You're playing the medium time frame swing pullback, or the big question is, you're anticipating that the medium time frame is going to reverse, okay? So you're anticipating this is going to happen, right? And when can you do that? Well, like we talk about, you do that when you're here, when you anticipate that we just shifted bullish on the medium time frame to facilitate that pullback. We've now come into that strong internal high, high time frame high, and we're now expecting your medium time frame to switch bearish, which would be that break there, right? That low is going to go, right? And you're trying to get in before the swing trend switches bearish, you're anticipating that movement. But typically, most times, I'm not always going to get in here and anticipate that. It's just, you're just playing the swing pullback, okay? So when is it best used? It's best used after a higher time frame POI mitigation, okay, i.e. when we come into a decent level. Because what can happen is your medium time frame internal structure can be bullish like this, right? And then you might get one bearish IBOS like this, okay, at that moment. So then, yeah, you're in phase C. You are against the swing trend because the swing's bullish, but you're pro-internal, right? Because you've had an IBOS. But what can happen is you can get short right here and then price just continues up. So obviously, if you wait for price to mitigate a higher time frame supply level, and then you get a bearish IBOS, there's obviously a bit more confidence, right? That we're now actually likely to go, and that wasn't like a fake signal, and then you don't get stopped out. Okay, so it's just a bit more confidence if we actually come into a proper higher time frame level. It's also best used after your medium time frame swing boss, so i.e. when we're actually expecting that swing pullback to occur. Right, that's the best time to be playing counter swing and pro internal because you're trying to play the swing pullback. Because another scenario in which you are in phase C would be, so counter swing and pro internal would be like, okay, imagine, I haven't drawn it on, but imagine like we came up here and then we came down and then we had a bearish IBOS, right? And then that technically would be counter swing, right? If you're shorting, but pro internal, okay? But typically at that point, we've already had the swing pullback. We've mitigated the extreme demand, the strong low. Really, we're expecting that high to go now. Okay, so these trades can still play out, and you still might want to trade it. But for the most part, sometimes like this can just get a bearish IBOS. It might just be coming down to mitigate this level down here, right? You think you're pro-internal, and yeah, you are, but then it can just go up anyway because really the swing trend is done, and we're about to continue up. Okay, so that's why the best time to do phase C is here, where you're playing the start of that pullback and it makes sense that the internal trend is going to be respected at that moment, okay? So just another thing to think about. So yeah, after the swing boss, basically you're going to be playing the swing pullback phase and then the start of the swing pullback, right? So before you've reached the swing EQ, because remember, what is the objective? You're playing the swing pullback. So if price is already down here, yeah, you're shorting counter swing and pro internal, but it's like you're below the EQ now. There's an increased probability that swing pullback could be finished at any moment, so the internal structure could shift bullish at any moment. So the best time to do it is when we're still shorting in the premium and you have that risk reward. We haven't yet mitigated any significant demand, right? What's the current objective? What has been mitigated? The current objective is to play the swing pullback, right? And if you're shorting here and price are coming up to you, remember what I always said, when price are coming into your medium time frame POI, ask yourself, what has been mitigated? Well, look left. Are we coming off anything significant? Probably not really. It's probably just a medium time frame POI. So we just expect it to be a reaction point for a pullback. So you're not too concerned, right? Whereas down here, if price has mitigated a higher time frame POI and it's coming into your level, well then what's being mitigated? This level is probably likely now that the objective is complete and this is going to switch bullish, right? So two very different trades, but at the same phase. So that's why you need to be, really asking yourself where you're within. Okay. So yeah, in these instances in phase C, it's optional whether or not you want to wait for a medium time frame chart, because generally if we've come off a really strong higher time frame level, we've had a very convincing IBOS, price comes up into the extreme, like I'm gonna be happy to jump down to the lower time frame pretty much straight away. Whereas like I said back here, let's say you get a bearish IBOS here, right? So that's the same trade, but we haven't quite hit like a major level, so this could be a bit of a trap and I'm not quite sure. Then maybe I'll wait for a chalk here, right? Just to show that this high is actually holding, right? That might be a time. Okay, so it's going to depend again on the narrative, where we are, does it make sense? How confident are you that this high is going to be respected and internal structure is going to move to the downside? But for the most part, if you're doing it in the right area, I'm pretty happy to get involved at that level. And then the last sort of main phase is the one that I'm going to say, basically don't trade, at least until you are already consistently profitable. And that's when you're just trading counter everything, counter swing and counter internal. And generally, if I could keep this super simple before we kind of really talk about it, if you do want to do it, just if you are going to do it, at least wait for a medium time frame chalk. Okay, don't get short here when it's counter, fractal, internal, and swing. Okay, don't just jump down to the lower time frame as soon as you hit your medium time frame POI. Right, at least wait for a medium time frame chalk. Okay, because you're playing counter everything. Okay, so very aggressive, avoid until consistently profitable. So if you're in this phase of the market, again, what is the objective? One of two things: you're either just playing the internal pullback, right, because price could come into the strong internal low here and continue higher. So you just have to be thinking, I'm just playing the internal pullback. You can't, well, you can, but you can't just assume we're definitely going to shift bearish here on the internal structure. So you're just playing the internal pullback, or you're trying to anticipate that internal reversal for the swing pullback, right? You're trying to anticipate the IBOS and you want to get in early. Okay, but it can be pretty unnecessary to do that most of the time. But if you want to do that, i.e. if we've come into this level, strong high time frame high, we've literally hit the extreme, it's all systems go. That's, for me personally, that's pretty much the only time I'll consider phase D, is when we're in a level like this. Okay, I'm not going to do it, when it's counter the high time frame trend as well, right? So in very rare scenarios, but even then, I pretty much always will wait for a medium time frame chalk at least. But for the most part, just wait for the internal structure to shift and then just be in phase C for the most part, okay? That's what I would recommend the majority of you wait for if you're going to trade counter swing. Because yeah, you can get yourselves burned a lot. But what's some things to think about? So best use after the medium time frame swing bust, because we're expecting the swing pullback. I.e. if you're going to be trading counter everything, you want to be doing it after this, but we're expecting that movement. Because technically, up here is the same phase, right? You're counter swing and counter internal, but where are you trading from? You're trading from a weak high. We're expecting this high to get smashed now. That's not really the time to do it. Whereas at least here, there's reason to believe we're about to pull back. So yeah. So ideally avoid when swing pullback has just ended, number 9. Yeah, that's another example, right? That's probably even better area to avoid, because right here, we've literally just mitigated the extreme. Momentum's often going to be strong at that moment. That's usually when the corrective pullback's over, and we're usually just about to go pretty impulsively. So this is, again, another time in which you might want to consider just leaving alone. Doesn't mean you can't. There are going to be times when it can look clean and it's corrective and there's nice risk reward and blah, blah, blah. But for the most part, not really a good idea to be trading there. Best use after a higher time frame POI mitigation and refined medium time frame POI even better. I.e. if you're going to trade counter everything, at least do it when we've come into a really significant high time frame level, i.e. up here, and you want that medium time frame refined level within there ideally as well, right? Because obviously your high time frame POI can be quite big, so if you can refine that to a medium time frame POI within it, it's going to help you be a little bit more accurate. After a medium time frame chalk from that level, so like I said, right, you don't just want to be jumping into your lower time frame entry model straight away when you're counter fractal, internal, and swing. At least wait for a medium time frame chalk. Also, ideally, if you get like a strong medium time frame liquidation, as we know, we want to see that strong liquidation into level, then that can be a good level, right? Because it's much more likely now that's going to be the move that goes. Pro higher time frame trend, so the higher time frame swing pullback is complete. That's exactly what I'm saying here. That's pretty much the main time in which I consider doing phase D. It's when it makes sense to be aggressive. And then enough risk to reward into the strong internal high and low. Okay, so that pretty much applies to all of them. Like if you're getting short here, you want to make sure there's enough risk to reward into this level, right? Because sometimes you're going to have hardly any room. You don't just wait for the IBOS, right? Only do it when this is quite an expansive move and you've got enough room to play that internal pullback. You can remove your risk, take profit in case we continue higher. Okay. And then, so yeah, like I said, summary, either just don't trade this phase, which is what the majority of you I would recommend, or at least just wait for the M15 chalk, okay? And then the last phase, which will happen a fair amount of the time, will just be in a bit of a range where the medium time frame, it can get a bit choppy. You'll see it will come in, we get initially some clean structure, but then it will kind of break that low, then it'll move up, then it'll break the high, and then we kind of it gets a bit choppy, right? You'll see that around August, start and end of the year. It can just whenever. Sometimes the higher time frame is starting to kind of just accumulate, build some liquidity before we get the movement, and there's no real clear direction. And this is when people kind of lose their shirts a little bit and they keep trying to trade as aggressively all the time, when there's not really clear structure, there's not really clear intentions, there's not clear order flow, that's where you just want to go, okay, let's take a step back a bit. Either just be patient, wait for clear intentions, wait for a clear breakout, and just be patient, which is really hard. I get it, but you need to do it. Wait for when it's really obvious and clean like this. Or if you're going to do it, trade basically the top 33% or top 25%, just use a fib tool, shorts up here and longs down the bottom, and just stay out of the middle. And that's it, okay? So quite a long video, quite a lot there to talk about. A lot of it's going to not sink in straight away. You might understand the logic as I'm going through it, but there's a lot here. So what I would recommend is you just keep coming back to this video. So like if you find a scenario when you're live trading or when you're back testing, come back here and, look at the specific element, identify what phase was I in at the moment, and then watch that part of this lesson. So I'll try and timestamp the lesson in here, so it'll help you with the future. And like use this guide, okay? Again, it's just a guide. This isn't, super firm stuff, but it's just to help you to really think about what you're doing within those phases. And remember, it's not like phase C isn't just here. Phase C is here, like it's loads of areas. But hopefully I've spoken through how they're all the same phases, but they're all very, very different. And you might want to think about them in different ways and wait for different confirmations depending on where you are, right? You need to build that all together. But I'm hoping this guide can really just make it a lot more clear on how to do it. And this is advanced and it will take some time. Like I wish I had this years ago. Like this is taking me so long for me to really, truly and deeply understand. And that's why in my plan is very, very bare bones. And, I don't have in this situation, wait for M15 chalk or medium time frame chalk. In this situation, wait for M15 IBOS. Like I now like to use discretion. I don't need like a 30 page trade plan with a massive, super complicated thing. But it's because of this. It's because I have all of this in my mind and I know and I understand what makes sense to me in that moment. And I'm hoping this can be not mechanical, but like give you a bit more of an actual written down thing of what's all in my head, like to help you with that, to help you get going. But like I said, like with everything in here, take the thing that's on theory most high probability that you can get your head around, i.e. pro swing, pro internal, and just focus on that. Focus on one entry model, i.e. strong liquidation, and just master that. Then bring in the next thing, right? Pro swing, but here, and only do this when you're like at a level that makes sense. Don't be doing phase B like here, like right at the start, because it's obviously low probability. Wait for price to pull back into a level. Okay, then you get good at that. Okay, now I want to practice trading counter swing. Well, I'm only going to do it when I get an IBOS. Majority of you should only be trading these three phases, really, right? And you're only going to, okay, I want to trade counter swing. You just wait for the IBOS, wait for the IBOS, wait for the IBOS. It's as simple as that, right? And then you can start to think about these. And then eventually, if you want to get really advanced, you can start to bring in that stuff. Okay, and then you just got to be careful of recognizing when there's no clear intentions, and it's going to happen a lot. Just be patient. You know when it's clear. You know it's obvious. The market's shown its intention. You want to trade in that direction. If it isn't, just be patient. Don't get FOMO. Wait for when it's nice and simple. Okay, and really use the higher time frame to help you with this story. Now we talked about 3 time frames. Okay, I personally use more than that. I bring in the daily and the weekly with my lower time frame stuff, but for the most part, this is the main way to think about it. Those 3 time frames, and I'm really hoping, this will help. So keep coming back to it, go over it and over it again. Probably recreate this, create your own rules. But I truly believe this lesson, this sort of way of thinking about it is the key to bringing everything together and really wrapping your head around all of the different scenarios that will occur in the market with this time frame. So I won't ramble any longer. Hopefully you took some value from that. And yeah. So again, talked about a lot of nice theory, but how does that actually look on the charts? So we're just going to go through a bit of price action that some of you should hopefully recognize from the earlier lessons in the putting it all together section. But let's now apply our knowledge of what we just spoke about the medium time phrases. So in this example, the higher time frame we're going to use is the 4-hour chart, and the medium time frame you're going to use is the M15. Okay, so this is our higher time frame. In reality, I personally would still be looking at the daily and having a good idea of where we're at, but let's just keep it simple. Stick to those 3 time frames. 4-hour is as high as we're going to go. You can see that the swing trend is bullish, had a bit of an internal pullback after that initial bust, but we've just continued to the upside. And then the section of price action we're going to be looking at is here. Okay, so I'm not doing bar replay. This is already all played out. But essentially we're going to be looking from the point of where price is here, okay, to where we are now, okay, when we go down to the M15. So essentially, all we need to be thinking about the higher time frame is we're bullish, but we've had a boss, reasonably starting to get overextended now. So at this point, as we start to kind of use this exercise, we're going to be thinking that, the 4-hour chart might be starting to pull back. However, if we look left, just scroll over here, because obviously it's quite far away to find our nearest level of supply, we haven't quite reached our refined pivot level of supply. We are within the range, but not quite into here just yet. So there is potential cause, for higher prices. We may not get that 4-hour pullback until we hit our 4-hour level of supply, okay? So, if you think about what kind of phase you're in, at the moment, we're sort of, on its way to that higher time frame level. We haven't quite reached it yet. So we jump down to the M15, and I've pre-populated this all on there, just to turn into another 60-minute video, and I've put this here. So I was taking a screenshot, so I'm not sure how well that will turn up on the screen recording, but you guys should have a high resolution copy of this, and it'll be in the notes below the video. So this section here was, like I was saying, that first bit on the 4-hour chart where we haven't quite reached our higher time frame POI. So we know we're bullish on both the higher time frame and our medium time frame at that point. Okay, well, let me take a bit more slowly. We've had our M15, or our medium time frame swing pullback. Then we had our break of structure. So just keep your eyes on this sort of level here. When price is at this point in the market, just imagine you can't see any of this, right? And price is moving, you want to get into a trade for whatever reason, right? What can you do at this point? Well, we've had a boss. We know we're expecting at some point an M15 pullback could continue. We are bullish. So actually, do you know what? Technically, we are still in phase A at this point, right? We're pro swing and we're pro internal. So you could look to wait for this to pull back and try and capture and get long on that internal higher low and try and get, another quick move potentially up to higher time frame demand. You could totally do that. However, in this scenario, we don't have any demand within the leg, so there'd be nothing to do. So literally, as price is doing this, nothing's going on for me. There's nothing that meets my plan. I'm either waiting for price to come into here and then start to develop and react, or I'm waiting for price to pull down into a demand zone, right? Only real clean one being here. There is a slight pullback here. It's a bit hard to see, but that candle fails to break the previous candle's high. So, potentially there's some demand there, but there's nothing in the leg. So just chill. For there to be a shock, price would have to break down here. So literally at this moment, nothing's going on. We've just had a straight movement up and a pullback. We're not coming off anywhere. We haven't pulled into demand. This is where you have to be patient. Don't sit on your lower time frame getting into all sorts of madness. Just let your medium time frame develop. Yeah, medium time frame ideas, medium time frame POIs, lower time frame entries. So as we start pulling back, I literally set my alert maybe on that demand and then set your alert at the higher time frame level. And then obviously as we start to pull back a bit more, then you can go, right, well, now that's enough for me to call that my internal high. Okay, so you could set your alert on that because that's a bit more of an interesting piece of structure. So all of this, nothing's going on for me, nothing that meets my plan, nothing. Okay, we get a break of that high. Okay, then we start to retrace. Now, at this point, if you're looking to short after a sweep of that high, you would be counter swing and counter internal, right? Because everything's bullish. We haven't come into a higher time frame level. I mean, there might be an M15 POI that all the way there to the left, but how relevant is that going to be? I'm not really that interested. Really, I want to be, if I'm going to trade heavy counter trend, at least wait for your higher time frame levels to be hit. Or wait for what? Wait for phase C. At least wait for something convincing to show you that structure is shifting and price is pulling back, right? So we sweep that high. We get a bearish chalk. So again, at this moment, I wouldn't be interested in this. The only times I want to be doing that really is when we come into a higher time frame level at least, and ideally a refined, M15 level from within here if you want to go look left, and then think about it. And you want to see a strong liquidation into that level. So at this moment, we've had nothing, right? This high didn't achieve anything. It didn't break any structure. So we've swept it here, but it's not a strong liquidation because this high didn't actually achieve anything, right? It didn't break any structure. So at this moment here, all you have is, a sweep, like a weak sweep and a chalk. So, could you look to get involved in here? Potentially, because that would be a bearish chalk, but we haven't mitigated our high time frame level yet. So I wouldn't advise that. Whereas if you're just a bit patient, and then boom, now we get like a clear shift in structure. All right, we break and close below that low. Now at least you have some form of strong structure to trade from, i.e. short from this strong high, right? Because actually managed to break that low there. So now you're entering into phase C where the internal trend has shifted bearish. We have that bearish IBOS. This can become our strong internal high, right? So now we are counter swing and we are pro internal. Now, yes, there's still potential that we haven't mitigated our high time frame level. So, we could literally just go higher. There's always that in the back of your mind. We have not yet had a strong liquidation. This was just a sweep of a weak high, right? So this could be your fake break. to generate strong sales, strong buy side liquidity behind that high, right? And then that could be the strong liquidation into there. All of those things are possibilities. It's all confluence you may want to consider. But, that's pretty decent, right? We've had somewhat of a sweep, strong IBOS to the downside. So now you have a strong internal high, and this can be where you can consider trading phase C. So if we're in phase C and we're looking to get short, what is the objective? We are looking to play the medium time frame swing pullback, i.e. M15 swing pullback, right? Internal structure shifted bearish to do what? To facilitate the swing pullback down into the discount, down into discounted demand. So if we're getting short, that's our expectation of price, right? Now we could, like I said, the second bit here, or anticipate a medium time frame swing reversal if the higher time frame suggests. So if we went back to the 4-hour chart, which is our higher time frame in this instance, right? What you could consider in this scenario is because the 4 hours bullish, if we had mitigated into 4-hour supply, right, and then the M15 had a bearish IBOS up here, then yes, the M15 might still be bullish at that point, right? You might have an M15 swing low here, but you might anticipate that because we've hit the 4-hour supply, we may be getting a 4-hour swing pullback, right, down in towards the swing low. So if the 4 hour is going to have a swing pullback, what is the M15 going to do, right? If we were there, what would the M15 do? The M15 swing would switch bearish, right, to facilitate that swing pullback. Because if I zoom out, this is that 4-hour swing lows all the way down here. Yeah, that would be here. So if we come into higher time frame supply, and then we're expecting that higher time frame pullback in towards our higher time frame low, what's going to happen? The M15 swing trend is going to switch bearish to facilitate that pullback, okay? So if you had enough confidence and reason to believe that you think that 4-hour swing pullback may be starting, right, then potentially you could get in short here on that IBOS with the potential that the M15, your medium time frame internal structure, may stay bearish to facilitate that 4-hour pullback where the M15 swing trend was switch bearish. But in this instance, do we really have like real high conviction to believe that's what's going to happen? Well, we haven't had a strong liquidation yet. And in more simple terms, we haven't hit 4-hour supply, right? 4-hour pullbacks are mainly going to occur from 4-hour supply and demand zones, right? So at this moment, I wouldn't get too fancy with the forecast. I just think M15 IBOS, M15 swing pullback. Keep it nice and simple. That's your expectation. Don't swing for the fences. If you're getting short, don't be thinking, right, I'm going to hold 400 pips to the downside, right? Pay yourself. Whether you do fixed 5R, whether you just target this low, whether you want to target a bit further down into the EQ of the swing leg, whether you want to target refined demand, right? That's going to be down to you. But it's about, as long as you understand what the objective is and the expectation, then you can make an informed decision in general, right? So yeah, that's pretty much it. To be honest, I don't want to get too bogged down in all of this. I said, best use after a hard time frame POI mitigation. We don't quite have that. Best use after an MTF swing boss. Well, we do have that, right? Because we've had the boss here, so it makes sense now to play the swing pullback because we're expecting that after the swing boss. And then the start of the start of the medium time frame swing pullback before price has reached the swing EQ. So in this case, right, we think it's the start of the M15 swing pullback. The EQ would be around here. Let's draw it on properly. I've got the range tool on. Down to here, right? So we haven't got there, we haven't pulled back, so there's good reason to believe there's good cause for lower prices for the swing to pull back to the discount, right? So that's all good. So this is kind of pretty much, not perfect, but really, really high probability to be looking for those sort of counter trend moves, right? With phase C. So optional to wait for a MTF chock. So what does that mean? Well, when you're looking at shorting from here, or potentially even this POI here, whether you want to wait for price to come in and then give you that M15 chock, that medium time frame chock, to confirm the end of the internal pullback, to give you a bit more confidence that this high is going to hold and we're not just, it's not an early trap, then you might want to wait for that. It's optional. I think in this instance it looks pretty good, right? You've had a sweep, nice strong movement down, we've got inducement, etc., etc. So happy to look for shorts from within there. And if you wanted to wait for a chock and or scale in, what do we get? We get the internal pullback into the extreme, nice strong movement to the downside, we get the bearish chock, and then there's another entry there, okay? So hopefully you should recognize this from the putting it all together section where we went through this on FX Replay, and you can go and revise that. I think it's day one actually, on the M1 entries. I'm not gonna go over that in here because there's no point on me repeating myself. The key lesson from this is understanding the phases and the expectations, and we're basically using this as our guide for that, okay? So another phase C trade there, right? And then we get another IBOS. So at this point, this becomes our new strong internal high, right? And then we start to pull back. So you're still in phase C at this point, okay? But are we still, is it still optimal to keep looking for shorts? Well, what was the objective of phase C? The objective is to facilitate the swing pullback, right? Because we're not really, the other objective is to anticipate that the M15 is going to switch bearish, that your medium time frame is going to do that. But remember, the higher time frame doesn't really suggest that just yet. I mean, it could do because the 4 hour has had a boss. Remember, we have broken structure here on the 4 hour chart. So we are expecting a 4 hour pullback, but we don't really have, because this is where we're talking about now, we don't really have any confluence or confirmation to suggest that that's going to happen yet, right? We haven't broken any structure. We haven't mitigated our supply level yet. So you don't really have a lot of evidence to really say with a lot of conviction, right, that the 4 hour swing pullback is going to start and the M15 is going to switch bearish, okay? So if you're going to keep following the internal structure, the bearish internal structure, and trade against the bullish swing, i.e. phase C, the best time to do it is when? It's then at the start before we pull back down to the discount. So if I measure on that, okay, now where are we when we come down here? We're now below the EQ, we're starting to come down into the discount, okay? So I'm not saying you can't keep following the internal order flow when this happens, it's just you need to be thinking how high probability is it for you, right? You need to make these decisions and weigh that into your decision making, okay? So we pull back, nothing really goes on, and then we come down. I've just refined this because it's quite a big zone, right? I just refined it to the body, but essentially we've come down into our extreme. So now we can start thinking about, if we go back to that plan, we're around here, okay? Because when you want to trade in line with the swing, so getting long because we're bullish, but you're trading against the internal, technically, you could also look for longs from within here, right? There's a kind of crappy POI here. I think price trades through it anyway. Like you could have been looking for longs potentially around here on a lower time frame when price comes in, and that would be phase B, right? Pro swing and counter internal. At this point here, when price is here and you come into this like POI, what is, first of all, whenever price is coming into POI, what I want you to do is go, what phase am I in? And you can quickly work that out because you look at structure. Well, I know the internal structure is bearish, so I'm counter internal, and I'm pro swing because the swing is bullish. I'm looking for longs in the barn. Okay, so you're in phase B. Okay, cool. Then you ask yourself, what is the objective when you're trying to trade phase B? Well, the objective is best used when you're anticipating the end of the swing pullback and you're anticipating the internal reversal, that internal is going to switch bullish. At this point, could that happen? Yes, it could happen, but does it look likely? Well, for starters, we're not quite really in the discount just yet. This looks like a terrible POI. Like it's just kind of just halfway in the leg. There's no real clear like pivot in price. It's a bullish candle as well. There's no inducement. It didn't sweep. There's no kind of real clear direct flip. Arguably, it flipped that wick, but a lot of momentum coming down. There's like no liquidity built here. This looks like it's toast, right? It does not look very good to be buying long from there. So this is where you can avoid that loss potentially, right? Because you understand there's cause for lower prices. Or what you might want to do is this is a time where you wait for a chock first, at least wait for a chock to signal that internal pullback may be starting, because you could play that move and you just be longing into here for them at a potential another internal leg to the downside. So do you see how like these are both the same phase, but when you ask yourself these questions, go, when is it best used? When we pull back past the swing EQ, which we haven't just yet, when we've mitigated the extreme medium time frame and or higher time frame POI. Well, we haven't done that yet because that would be down here. So this doesn't look that great, does it? So this is when, if you want to trade from it, it might be best to at least wait for an M15 chock or just leave it, just ignore it, right? And yeah, that's pretty much it, right? You guys can see that. Whereas when we come down here, it's the same phase. It's still phase B, but we're now in extreme, right? This is a level that has to hold. Now in this case, this is quite a big zone. So, there's reason to believe you could have a bit of a movement into here. You could come up into that internal supply and we could come lower, right? That's something you have to bear in mind. That's why I mean every single piece of price action is unique and you need to weigh it up and you need to make the decisions. But here's the guide. So if you're at this moment and you realize, okay, internal is still bearish, but the swing is bullish, so I'm in phase B. Okay, but what's the objective of phase B? It's to anticipate the end of the swing pullback and internal reversal. Well, this is the level kind of in which it has to hold. So I'm just going to get rid of this orange line. Then if you see that big like reaction, okay, aggressiveness coming in, that's showing you that, right, well, probably big orders are being filled. This is looking pretty good. At this moment, you may want to consider getting long, okay? And I believe there was like an M1 entry in here, pretty sort of aggressive advanced one. Now, at that moment, what you might want to ask yourself is there enough risk to reward to the internal supply and demand and the strong internal high low? Well, at that moment, right, that's your strong internal high and that's your weak internal low because the internal structure is bearish at the moment and you're trading directly into this medium time frame supply, right? The M15 supply that caused the break of that low. So again, it's down to you. I'm not telling you what's right or wrong. It's down to you as a trader to make a decision at this point. Do you want to trade against that to anticipate the movement, or do you have enough risk to reward to get in long and then remove your risk as price comes into here in case we continue bearish, right? There could be cause for lower prices. We haven't had a strong liquidation yet. Do you know what I mean? You need to weigh all of that confidence in. So if you're not sure, what can you do? Well, you just wait, right? Let's see what happens next. Price then breaks structure to the upside, okay? So now when price is here, now the internal structure has shifted bullish, right? It's a pretty good sign that that swing pullback is over and that we can start to target this high. Now, there is a slight caveat to that, and I've spoken about this in the earlier lessons, whereby this wasn't the most convincing of internal pullbacks. So it was a little bit small. So there's some reason to believe that that could just be one big leg down and we could pull back into here to then continue lower, okay? Something to hold in the back of your mind. But for the most part, we've had a very strong reaction from the extreme, big movement up, and we've broken that high and seen supply fail. Okay, so there's pretty good reasons to believe that the internal structure is now bullish, and we're now wanting to be looking at phase A really, pro swing and pro internal, and that's where we have the green section. Now, just before we get to here, could you look for a movement here, right? Well, yeah, you could, because there's a decent level of supply that caused that movement away, and you could look for a movement in here. Like I said, in case that was one big push down and come back up, we could get another movement. That adds some confidence to it, but for the most part, just assume the internal structure has shifted bullish. The swing pullback is now over, and we're now looking for this move. So could you play that quick pullback play, that quick internal pullback into here? Yeah, you could. I mean, it's up to you. But you just have to manage your expectations of price, that now the internal is bullish, you're just playing that. So again, if you're shorting here, you're counter swing and counter internal. So not really the best time to do it, and you want to depend on if risk was on your side. But probably for the most part, ignore those trades. Focus on what? Focus on the high probability stuff, right? We have alignment now. So pro swing, pro internal, you're back to here. What is the objective? Target the weak swing high and low, right? Because you have full alignment, decent probability the swing pullback's over, bullish IBOS, everything's aligned. Now you're here. And this is when as soon as price comes into your POI, you can drop down to your lower time frame entry model without having to wait for your medium time frame chalk at the mitigation, right? Because you have pretty good confidence that we're going to go. And that's it really. So yeah, hopefully you can kind of, start to use this as your guide to just help you. Sometimes price action isn't always going to look the same. Sometimes there's more space. We have bigger ranges. There's better risk to reward. You can factor in all of the confidence, but if you keep referring back to this, it should really help. And again, as always, price action is not going to be nice, clean order flow like this, right? We know there's going to be times where we get super choppy price action, like, even if we start to look here. Like, do you know what I mean? How easy is that to read? What's the clear intentions at this moment? Highs and lows are just getting swept. Nothing's really being respected that well, right? There's a lot of liquidity sweeps. It's range bound. And that's where you're just going to go, okay, I don't have a good read in it. Like, you don't always know straight away. Like here, you might think, okay, there's a pullback, then we switch bullish, right? Try and get long in here. And then if that starts to fail again, right, then you can look for the shorts from this high, right, to play the pullback. But then that fails, it's like, okay, maybe that, we're just sweeping highs and lows here. And that's when you want to realize, okay, I'm not going to keep being aggressive. I'm going to wait for some clear intentions and something to shift. So then for those of you who can see this, like, when is this from? Like, the 9th to around the 12th, so it's 3 days, but for some people that can feel like an eternity. If you just wait, when would you get nice, clean price action? And that's what we try to preach, is like, in those moments, don't keep forcing it. Don't let your confidence get knocked. Just realize where you are and then just be patient and wait for this stuff. Wait for the good stuff. And yeah, it can really help you. So yeah, hopefully that helps you to visualize the theory a little bit more, and just try and apply this guide to bits of price action and really practice it. And hopefully it can help you map your way through the market.